Who would really win in that circumstance if all of a sudden wages had to go way up because the cost of living went way up because of ridiculous inflation? Let's say a banana goes from 99 cents a pound to $10 a pound. You're only getting paid 5% more than you did the year before, but yet this cost of living is going up tenfold. Let's just say that that's happening. This huge cost of living increase and everything costing more, and pay going up too because everything costs more. Sometimes it turns into a lot of unemployment. Sometimes the high wages aren't substantiated by the revenue of the business or the nonprofit. Somebody with a big mortgage, a big loan, a long-term loan, long-term financing, a 30-year, a 20-year, a 10-year. Maybe there's a giant commercial business. They got a huge multi-million-dollar loan. It's a 40-year loan at some really low percentage, and they're locked into that percentage. You get locked into that percentage, okay? And the position you might be in where you might stand to win in that situation is if there was insane inflation. Prices went ridiculously up. People made more money, but they were in a worse position because the prices went up more than their wages went up. But this loan that they had, that they're locked into at this really low interest rate, now all of a sudden their bigger wages make it easier to pay off this loan. So this is the people who stand to benefit. Does that entail your typical homeowner, your typical entrepreneur, your typical corporate president, the management, chairman of the board of directors of some corporation? Does that benefit all those people? Yes. Yes, it does. Does it benefit the single mom working a job? Half of her income goes to daycare to take care of her kids? Absolutely not. She's not going to get anything paid off quicker. The cost and prices of her groceries is going to just go up. They're going to probably eat less. Instead of spaghetti sauce, they're going to use a can of tomato paste. Maybe they're going to use ketchup instead of a can of spaghetti sauce. I don't know. I tell you what, I lived in the Philippines 3 times. I've been close personal friends with families in the Philippines where they were very poor. In the inner city, deep back in the alleys, I had friends who I want to tell you what dinner was. Dinner at this house, a couple nights I was over there, was each person got a half a cup of rice and a half a can of tuna fish. That was dinner. Now, I'm sure there's a lot of Americans who have had a half a cup of rice and a half a can of tuna for dinner. Most Americans would probably admit that they would probably be able to get their hands on more food than that for their average dinner. But the reason I bring that up is I want everybody to remember. Who's really going to get burnt by heavy inflation. The people who are going to really get burnt by heavy inflation are going to be low-income families, middle-class families who are not going to be able to pay off that long-term loan. They're not going to be able to stand the test of endurance and time and the wrath of hardship and unemployment. They're not going to be able to endure that long enough to reap the if you could even call it a benefit. It's not really a benefit. It's really kind of a curse of inflation having this side effect of you being able to pay off some kind of a long-term loan, mortgage, and what have you. It's not a good trade-off. This is the myth. It's not a good trade-off. Let's say you were an executive in the banking industry. You were pondering and contemplating, I've got this loan on this commercial property, and I've got this loan on this house that's too big for me, and I only make so much money. And maybe you're the district manager of a chain of banks. Maybe somewhere in the back of your mind you might say to yourself, hey, if we just had a period of rampant inflation, if something happened where the dollar was so devalued that there was just all of a sudden huge amounts of currency in the people's hands and in the hands of businesses, and they're spending and there's all this money available. which is pretty much the situation when there's a finance bubble. All this money's out there, and then it collapses and it retracts. There's layoffs, and certain people that were laid off can no longer pay their mortgages. A lot of people already had a big mortgage, and they were like, my retirement plan is to own a rental house. If I get a rental house paid off, then the income from renting it could be a source of retirement income for me. Well, what's happening to these people?